Welcome back to Trading 360. It's time for the Disruptors. George Tsilis standing by here, senior markets correspondent. Taking a look at Broadcom, you have Keybanc raising the price target. The VM acquisition has now been closed. It's hovering around 52-week highs. Your thoughts on this name?
Well, I think if you just look at the price action this year, it's been a remarkable year for Broadcom, Nicole, because this company is really the leader. I mean, when it comes down to infrastructure solutions that integrate software and semiconductor hardware, data centers, server markets, and all the wired and wireless connectivity, Broadcom's really this company that's integrated as an infrastructure technology company within this ecosystem, both horizontally and vertically integrated. And I think if you look at some of the aspects of its business, it's growing its enterprise software business, the VM acquisition or VMware acquisition, based on what Keybanc is saying, is going to become very accretive for the business, not only in sales, but also in margins, because it was really a great complementary acquisition. So they've increased their price target to $1,200 from $1,000 based upon better synergies because of the acquisition, but also the fact that they're a complementary acquisition that's going to be sort of accretive to their implementation of more software and security solutions as well. And if you also consider, artificial intelligence, about 12% of sales right now for Broadcom is AI. But one of the things I noticed in their guidance last quarter, they've actually moved that target as a percent of total revenues close to 23% by the end of 2024. So I think this is a company that's well embedded in the wired and wireless infrastructure, but also an AI play that's sort of a stealth AI play. It's a very profitable company. I mean, it's got net income margins over 30%, and growth estimates on a forward basis are somewhere in the 22% range for earnings, as well as about a 24% range for total top line sales. So it's a growth company. It's growing at a reasonable price. It's intertwined amongst about 80% of the Fortune 500 companies use some Broadcom technologies, and effectively it's in a nice upward trend as well.
Yeah, and it's pretty amazing. They have this overweight rating. They really think this one can zoom higher. It hasn't broken the $1,000, but getting close. Got very close, right? 999.87. George, what's your trade today? Your example trade?
So you're right. If you look at the chart on a daily, it did get close to 1,000. It's pulled back, but what's nice is it's pulled back close to its 10-period moving average or 10-day moving average. So what we can do here is we'll play a trend continuation, and I like the fact that it's already pulled back a little bit. So we're going to go out to January, which gives us a couple months worth of flexibility in terms of expiration time cycle, and we're going to basically put on a long call vertical spread. We're going to go out and buy the January 960 calls, and then we're going to sell simultaneously the $1,000 calls. So altogether, this would cost a trader about $19 a share or $1,900 a contract. So ideally speaking, the stock does have to hit, at the very least, the 979 level between now and expiration. That's your break even, but your outlay is $19. That's your total risk, but your total return is potentially $21. So you're getting a little bit more than one-to-one return on risk. But that's, again, assuming the stock hits the $1,000 or higher mark between now and expiration the third week of January.
Yeah. All right. Good to see you. Thank you, George Tsilis. Really appreciate it. Broadcom, our disruptors today.